Joining us now is Charles Rowe, Director of Mortgages at UK Finance. Hi.
Hi, good morning.
Thanks for joining us on the programme this morning. Your boss, the CEO, said last week, as far as the budget was concerned, strong backing of the financial services sector as being the catalyst for the UK economy. So full of praise for the Chancellor. Do you think he still feels that way this morning?
I think in terms of the comments that he made at the time, yes, he does. What's happened is, of course, the markets have interpreted it in a different way, and this is where we're seeing the turmoil coming through in the mortgage market at the moment. But what I would say is that there are plenty of mortgage products out there in the market for consumers looking to purchase a property or to move on to take a remortgage.
Why do you think the markets are wrong and that your boss is right?
I'm not saying that the markets are wrong. What I'm saying is, in terms of the comments that my boss made at the time, David Posting made at the time, was a reflection of the budget that the Chancellor announced and the steps that he was taking to help consumers in terms of the cost of living challenge they were facing, and also to make sure that the UK financial markets are an attractive place for firms to do business.
That hasn't worked though, has it?
At this stage, the markets are interpreting it differently. We are seeing a little bit more stability coming through into the markets over the last couple of days.
Are we? In what way?
Well, in terms of the pound has firmed up against the dollar a little bit over the last couple of days.
No, it hasn't. I think it's was it 106, 107 overnight?
It was 107 overnight, but it's picked up from the 103 that it was.
103 was on the Asian markets, wasn't it? It wasn't actually here in the UK, so it's not really picked up at all, has it? And the International Monetary Fund, the lender of last resort, as we know, has stepped in to say that he's on the wrong course and he needs to change direction.
Yeah, I can't comment on the Chancellor's comment, the Chancellor's decisions at this stage, and I know that the IMF have commented overnight, and that's for something for the government to pick up rather than UK Finance.
But the impact on your business has been astronomical, hasn't it?
In what way?
In that people can't get mortgages. I mean, of course, there are mortgage products available, but we're seeing some of the big names like Skipton and Halifax and Virgin Money are saying, oh, we're not sure where this is going, so we're going to pull out for now, or offer different style mortgages that they didn't previously.
There are still 3,000 mortgage products available on the market. There's plenty of choice for consumers, whether they're looking to purchase a home or to remortgage at this stage. So there's certainly no shortage of mortgages. There is more mortgage on offer at this stage than there was at in the start of 2020 in the pandemic, when a similar issue occurred in relation to reduction in mortgages available in the market.
What cost? What are the interest rates looking like? How much is it going to cost people?
In terms of taking out a new mortgage at the moment, it depends on in terms of their loan to value and in terms of the borrower. One of the things that we would say, and we would encourage all consumers, is to speak to your mortgage advisor, an independent mortgage advisor, early. If you're looking to remortgage, they will be able to find the best product for you. If you're finding that you're in financial difficulties, then we would encourage borrowers, whether it's secured or unsecured mortgage borrowing, to speak to your lender at an early stage. They stand ready to help. They've got a good experience in this, and they want to ensure that consumers get the right product for their circumstances.
Bank of England suggesting that interest rates could go up to 6%. What will that mean for mortgages?
I can't comment on what future speculation is in terms of mortgages. What I would say is that everybody who's taken out a mortgage since 2012 has been stress tested. They've had a stress test above 3% above the lender's standard variable rate, to ensure that where there is market turbulence or movement in markets, that there is an element of affordability built in there. And that's a learning from what happened before the financial crisis in 2007, 2008.
If interest rates do go up next year to 5, 6, 7%. I'm not asking you to comment specifically on the number. What will that mean for people who have fluctuating as opposed to fixed rate? What will that mean for people who have a mortgage that fluctuates with the market?
So in terms of someone who's on a variable rate mortgage or a tracker mortgage, one of the things that we would say is, again, always speak to your mortgage advisor to see whether there's a better product that's available for you. But in terms of the banks are there ready to help borrowers who are facing financial difficulty, and will help customers switch to a fixed rate product if that is right for them at that particular time in their circumstances.
How long have you been in the business?
In UK Finance?
Yeah.
In UK Finance, I've been here for 2.5 years. I worked in the mortgage market for over 20 years.
And how would you compare what's happening now with the rest of your career?
In terms of what I've seen before, I've seen it worse. So in terms of
When?
the late 1990s, and also in terms of after the financial crisis, when we saw a significant reduction in house prices, and also in terms of an increase in unemployment at that particular time as well.
Also, just going back to your CEO, he said further tax changes and ambitious regulatory reform are required to capitalise on this bold first move. So he wanted to see taxes cut further. One wonders what impact that would have.
Yeah, I mean, I can't comment on those particular
but you represent
issues.
the business, so obviously,
yes,
come on.
Yes, I represent the business, but in terms of the tax cuts that he would like to see, there would be tax cuts and changes to encourage firms to invest in the UK and to encourage investment at all levels of the economy, to help the government in terms of their agenda in relation to levelling up, and also in terms of making sure that we have a vibrant and buoyant economy, which encourages investment both from overseas firms and also from UK firms.
So as far as UK finance is concerned, the Chancellor is on the right track?
Where UK finance sits at the moment, we are supportive of what the government is trying to do, and we are also supportive in terms of our members, in terms of our mortgage firms. As I said at the beginning, there is plenty of mortgage on offer out in the market at the moment, and we want to ensure that borrowers have choice, which they do have if they're looking to remortgage,
even though
or
it costs them more
purchase
money. Yeah.
That's a reflection of market economics rather than.
No, it's a reflection on what the mini budget's done.
It's in terms of where we are in terms of this current phase in the cycle. Things will start to level out. We are seeing that those firms that have withdrawn their products are putting them back on the market this morning.
OK, so as far as Virgin Media is concerned, as far as Halifax is concerned, I think the other one was Skipton, if I'm not wrong, they're all going to be back on the market this morning?
Not necessarily those three firms, but a number of firms are coming back with new products this morning, and towards the end of this week as well.